So what's going on in the mortgage market today? It's Friday, March 27th, 2020, and you're probably starting to hear from your colleagues delays in closings. I can't fund my FHA loan. The product's no longer there. I can't get a hold of my loan officer. I don't know what's happening. So I wanted to do a video for you, my realtor partners, and for those that we've had a relationship with in the past, and send this video out and try to give you some guidance on what to do and what's going on. I'll keep this pretty short and to the point, but here's what's going on right now. So the last 3 weeks, you had the perfect storm in the mortgage business. You had rates initially drop because of the market reaction to the coronavirus fears. This avalanche of refinances, like the all-time greatest refinance boom ever, that literally overwhelmed all operational systems across the United States at every banking platform, large and small. Within 1 week of that boom, the mortgage market seized up. So the sell-off in asset classes spread to the bond market, which is what mortgages actually are, and treasuries and mortgage-backed securities got real volatile. I want to show you real briefly the chart, just to show you, this is a mortgage-backed securities market chart. Like, if you could read this chart from left to right, this is normally, like here, this is like how a market would look like. Slowly, rates are improving, and then things start to happen. Oh, coronavirus fear hits, they hit out their peak, and then there's a sell-off. Rates go up like 1% one day. They rally back. They give it all back. They really crashed last Thursday. Last Thursday, this is right here is where the market seized up. And then they've sort of rallied back. But that volatility did several things. Number one, for FHA loans under 660, the investment community nationally has pulled back and said, well, hey, wait a minute, we've got two things we're worried about. Number one, the biggest thing is they're worried about defaults and having to make payments on loans they've originated to borrowers that can't make the payments through what's called a forbearance agreement. The way the mortgage business works, if you're the servicer and the borrower doesn't make the payment, you still have to pay the investor of that mortgage, even though you're the servicer. So it gets sort of complex, but the reality of it is they've pulled back. And after last Thursday, they said, hey, FHA below 660, you need to pay 4 points. We moved very quickly at Service First, had a management meeting. We're able to shore up our pipeline to maintain that. But I'm not, as of right this second, I don't know how long that market's going to last. There's a good chance it gets disrupted for 60, 90, 120 days, maybe 6 months, where you can't do your low FICO FHAs. There's a good chance any of you have bond loans right now that those could be affected moving forward. The jumbo market seized up, so that there's very little jumbo product available. And then what's called the non-qualified mortgage or non-QM, which on the street, it would just be like your bank statement loans, your self-employment loans, the people that have BKs and it's not seasoned, all those kind of mortgages are coming back. Those are all gone. Their funding dried up. So as a realtor, you need to make sure that number one thing to do right now is shore up your pipe. Go back, make sure everyone's covered, make sure you've got your loan approvals in place, that the lenders can perform on time, and that the product's still available. Because I'm hearing of lenders just pulling out completely and not even funding loans. We would never do that at Service First, but that's so you have the volatility, the product drying up, and then the other thing is operational capacity. Most of the banks out there did not have the kind of disaster plan in place that allowed them, and especially big organizations that use call centers, they couldn't just go have people stay at home. Our organization, we were ready. Every employee has a laptop. We have everything was set up. Service First, seamless perfection. We went from working in the office environment to working remotely, no interruption in service. Now here's the big thing. Because of our operational excellence, we're able to maintain a 30-day turn time. It's actually 25 days from the submission of the loan into processing to close. And then but that 25 days, that's when our processing team gets it. That means a disclosed loan with an executed contract. We have all the documentation we need. We can still perform, and we're committed to maintaining that. I want you to share a quick story, a story yesterday that's so important about our mindset at Service First. We're a realtor-based referral business. That's what we are. We are the number one realtor referral-based lender in the Metroplex. So this week, whenever anyone needed assistance on a file and it was a risk-based decision, it went right up to our president, Sean Broussard. You know the first question he asked every single time? The very first question was, this a referral from a realtor? And the reason he asked that is because he built Service First from the ground up with realtor relationships. And we still are that way. So if you're not working with a community lender that understands that you need to get paid, that has operational excellence, that can perform on time, that's going to have all products available, that has liquidity, that has financial stability, and knows what they're doing, you are jeopardizing your entire pipeline. I'm here to help you. If we're not working together, reach out to me. If we are already, just do what I said. The ones that I'm not handling, make sure they're on solid ground. All right, guys, I'm available. If you need anything, give me a holler. If I don't, pick up, I will respond as soon as I can, but I will be around all weekend if you need any assistance. Thanks so much. Have a great day.